Hello and welcome to the LNG Just Covered podcast, where we talk to advisors and key stakeholders in our industry about their views and opinions in the intermediary space. My name's Wayne.
And I'm Hazel, and today we are joined by Stuart, who's from Dartmoor Financial, and they're a company that specialise in mortgages for those over 50. So welcome, Stuart. Thank you for joining us. How's your morning been and day been so far?
So yeah, it's been great fun actually. So we've I started at 5 o'clock, got on the train at 6:55, but I plan, right? So I couldn't be sure I could park, so I didn't want to make any mistakes on any of that and keep you guys waiting. So done that, and then when we got to Paddington, didn't want to do the tube, so we decided to go for a nice 4.5 mile stroll across the town, which has been great fun. Picked up some guitar views and stuff like that, and it's been nice. You always see the town better when you walk through it. I think if you just pop up like a whack-a-mole out of a tube station, it's just not quite the same.
Oh, fab. And yeah, well, thank you for joining us and kind of speaking to us about your journey. So I guess you mentioned just before we started that you'd come from the kind of banking world, is it, into what you're doing now? Tell us a bit about that.
Yeah, so I mean, it's funny how your whole history kind of just collates over the years to mean you actually end up quite good at something, I find. And I started way long ago. So I've turned 40 in June, so no offence anyone. Yeah. But I started working in a restaurant first when I was 15, just clearing tables, working with a lot of pensioners because they were always there for the £3 carvery. Yes, it was just £3. And then I left all of that. We moved to Devon. I was a manager when I was 18. And then I joined a bank, and the banking stuff was the same. It was like rolling over savings bonds and guaranteed equity bonds. Do you remember those?
Yeah, I remember those.
Yeah. So we were rolling those over for people. And again, they were older clients, and worked my way up into management in that, and I absolutely hated it. Didn't enjoy managing people at all. Missed the buzz of like providing products that suit people. And then we had a lovely moment where I was part of the co-op redundancies, which came along right when my children were being born, pretty much. Yes. So we had twins and no way of looking after them because my wife was already running our company. So I was like, this works, so give me the redundancy package, thanks. And then while I was working my notice, I did my equity release tickets and all the qualifications for that, and then joined in from there. And the reason I did the equity release stuff is because my wife's a really good mortgage broker, but she's not as patient as I am. And I really like older people. So I will do a cup of tea and a chat absolutely anywhere anybody wants me to go. And that's one of the reasons why I like the job at the bank so much, when I was helping older borrowers, older savers then. So to the point that people have actually found me from my banking job and said, you worked at Britannia or Co-op Bank, didn't you? Can you help me? I need this now. And I'm like, actually, yeah. And it's been really nice in the town to be the guy people still remember for that. So it's been good. Yeah, it's been fun. And there have always been positive calls as well, which is always nice when there's guaranteed equity bonds involved, because just how they worked. So it's good.
Oh no, and I can resonate with that. My background was mortgage and then into equity. I'd personally did equity release later, kind of late life advice, and we've just been speaking. Later life maybe isn't appropriate anymore because 50 is hardly later life. How have you seen it evolve?
So when I first started, it was very much a darker word. The equity release words were still those two words that put fear into people. I don't think it's quite there so much at the moment. I think there's a big challenge from the whole sort of kind of industry. It's quite small. To quote, you probably know of David Forsdyke over at Knight Frank, but he says it's a small village, later life lending, the equity release world, and it's right. And I think everyone's really pushing towards the later life lending branch because there is more than just equity release now. I'm still, very much more about. I think it should be 50 plus lending. Because that's the fact, isn't it? Later life. How do you know it's someone's later life? You're 51, you said, right? How do we know that's your later life? Could be 49 years yet. We don't know that. So I think there's still work to be done on changing the ethos of it a little bit. But it's a great job to be in. I thoroughly like it. I don't think there's a more rewarding job than stopping someone being repossessed or having... there's so many outcomes you can have. I've got loads of them in my head as well. So
I bet you have. And the background you said, which all three of us share that common ground in terms of the bank or building society or whatever. Yeah. The way you talk about that with a passion for that in helping clients, how has that shaped you in terms of how you approach things?
So Co-op Bank and Britannia back in those days had, there's Co-op Bank's still well known for its ethical values and things, and Britannia were the same. They had like givens and values, so when they merged, it was very similar. And we used to joke when I was younger, we used to call it, it's like a brainwashing kind of thing. But ultimately, I think I worked well with those businesses because they shared my own kind of passion for just doing right by people. I have this thing that I try and encourage other people with now, saying like, if you put good in, you get good out. Try not to look at what you're paid. Just put the good inputs in, and you can control that, can't you? Every day you do the best you can for whoever they are. And then generally speaking, the good stuff comes out the end of it anyway. So stopping people being repossessed is just...
Especially in that space you're working in, isn't it? Because as you said, that equity release was quite a dirty word. People feel quite nervous about it. Especially, I always personally found when I was... and whether you see this or not, but I personally found when I was advising in that space, a lot of customers would sometimes feel quite ashamed they were having to come at that age to get lending again, because they'd always had it drilled into them, get your mortgage paid off, 25-year term, that's it done. And so I think for you to have that, I'll put good in and get good out, is such a lovely way to be for them. Probably reassures your clients an awful lot.
It's just a nice way to be in general with everything. And if the other thing we used to say is treat everyone like they're your mum or your gran. Because you wouldn't have anyone do something horrible to your mum, and you certainly wouldn't let your gran get taken advantage of. And it is a nice way of being, and just remembering that, everyone means something. And even from the start of my journey in this industry, it's gone from that, I don't want to lend, I worked hard to pay my mortgage off, I don't ever want to get borrowing again. I would actually challenge that people are more acceptable of that now. You think we are much more in a rental society. Everyone's got a phone lease. Most people have got a car, that aren't really owned anymore. So the idea of having a mortgage to free up a better retirement for you, which you might pay interest towards for the rest of your life, as long as it's affordable from your pensions and doesn't impact your day-to-day living, or negatively anyway, then why wouldn't you want to do a bit of that? That's kind of where I end up with people more often than not when we're talking about options. And
the beauty of it is that the products you've got, they really can, the package, if you like, the advice really can be designed bespoke for anyone, because people have different reasons for doing it, don't they?
Yeah, they do. And what's great is that the efforts by Equity Release Council, all the different lenders, you guys as well. I mean, you've done just for that sort of level of trying new things to see if it works, see if it fits better for people, is great. You don't see that in the regular mortgage world. It's still very much a tracker, a fix, maybe it's an offset, but generally speaking, there's nothing that pioneering going on in that space. But everything with us, with the hybrid ranges, the reward products, all that stuff, you can really tailor a solution to people, as long as you're brave enough to stand up and say, actually, this isn't for you. So you've got to get over that first hurdle for, like, is this something that can actually help you or not? If it is, great, look at the options. But if it isn't, because there's harm coming their way if they do it, and I think the advisor's got to be brave enough to say, do you know what, this isn't the right thing for you, but this might be. And also to have that courage to say, I can't do this, but this person can, and I trust them.
It's interesting that actually, just taking that back then. So is there a bit of a juncture quite early on in the process where you look at, really, is this really the right route for you or not? And how does that conversation go?
I think the way I position it with people is that before we even get into what products are available, let's look at your circumstances, but also your circumstances as they might be in the future. So I'm kind of known for saying, it's all very well to be gung-ho in your 60s, but what about 70-year-old you? What about 80-year-old you? Have you thought about them? And it's kind of weird because you get into this like paradoxical system where you're like, yeah, but you might be, they might be a 60-year-old that's got no beneficiaries at all. And they think, well, I'll just take everything. And that's fine, but they haven't tried to move house once they've got zero equity left, or whatever might happen to 70-year-old them, or, So that first conversation is always, let's write down what it could look like the rest of your life. What's the impact on that? It's almost like, is it a SWOT analysis? Yeah. Like that kind of thing, but not without calling it like, here you go, Mrs. Smith. There's a SWOT table. Let's do that. It's not like that, but certainly like what's good about it, what's not good about it, and what will work and what won't. And having that conversation first, it's really weird if you think about it. Like we get paid, like our fee structure is on completion, and then we get a commission, right? So, but how many other jobs are there in the world where the first thing I do is try and talk people out of the thing that feeds my kids? Yeah,
it's like ruling out all the different other options.
Let's talk about how you don't need me. Yeah. And then if we can't justify why you don't need me, then we'll look at a solution that fits for you. But we're constantly telling people to, don't do the max borrowing, especially at the moment. Don't do max borrowing. It's super expensive. Take the drawdown route, take less, and that kind of thing. It's sometimes weird because you go against clients.
Yeah.
They think, well, I want what I want. You think, and I suppose that's the mark of a stronger advisor.
Yeah, and how do you have that confidence? I guess some advisors might, especially if they're maybe listening to this now at the start of their career and that less confident. How did you grow that confidence to have that challenge with your clients?
So, honestly, the confidence comes from making mistakes. And I say to any person entering the industry, and I always think if you can recognise that, there's cases I've done when I was really early doors. A client would say to me, "I want max borrowing." You'd be like, "Fantastic. Brilliant. Cheers then. Let's get that sorted." But then when they come back to you in a few years' time and they say, "Oh, actually, my husband's died. So we took all that money to go on holidays, but I don't want to go on it anymore. I've got all this debt now. What do we do?" It's a really tough conversation to have. And I'm one of those that it sits with me a long time. Stuff like that, mistakes I make, I do learn from them, but they do sit with me a while as well. And I recognise the importance of it. So there is a part of it where you think, any new advisor, I'd be like 100% get yourself like a mentor. And I'm happy to do that I've done it within HLP, just new advisors, just come and talk to me first and run
really
cases
important, isn't it? Because and just what you were saying there about thinking about 70-year-old, 80-year-old you and what could happen. You've learned from that, haven't you?
Yeah, you do. Yeah. But also, I mean, you people don't think about it because people, even when I was at the bank, you do someone a 1-year fixed rate bond or something, just something as simple as that, and they say to you, you'd say, "Well, what's your plans? What are you going to do with it in a year's time?" And straight away, "Oh, I'll be dead by then." From the age of 50 up. I don't know if you hear it much, but all the time people are like, "Oh, well, I won't make it to 70. I won't make it to 80. What if you do?" And I think that really needs time to take with that. And that's one of the it's a difficult part of the job, but to try and bring the family into that conversation is good. And I think it's a really good time to be doing stuff like that. Zoom, Teams, WhatsApp groups for not just the clients, but their kids as well. Is such a great way of being able to communicate with the whole unit at once to make sure everyone's okay. And then you also can have the nastier conversations, or not nastier, but perhaps the harder conversations for the parents with the kids to ensure that everyone's pulling together for the same reason, rather than, like when you're trying to weasel out coercement and other stuff that might be occurring in the background.
And also there's a trust element from their point of view, isn't it? Because everyone's got to be on the same page, haven't they?
Absolutely. I did a meeting the other day via Zoom, and the guy turned up with the wife, bless her, is still working at 70 in Sainsbury's, and that's not a bad place to work, just so we're clear, but she doesn't want to do that anymore. And they've got a real problem where their lender's calling it in, and they can't quite borrow enough. We did a meeting with just the husband, wife was at work, but all 3 kids and all 3 partners all zoomed in from their own workplaces as well. So I had 7 people on this call, and he was not embarrassed, but he was not necessarily willing to say to them, "Well, if we remortgage, there's a $7,000 shortfall from the most we can get to stop them being repossessed." And I just said, "There's 7 of you on the call. Has everyone got $1,000 they can give their dad?" And they all went, "Yeah." But I had the conversation with him. He didn't have to do that. So I was like,
that's that proud. It's that pride thing.
So it's really nice.
And you don't always talk like that. You don't always share that type of thing, do you? Particularly with
he didn't want to.
And all of that.
So I texted him before, and I said, "I'm going to ask a question of this lot, and you're probably not going to like it, but I'm going to ask it anyway because this could keep you safe in your home. So I'm going to do it. And if they all hate me afterwards, well then they hate me, not you." And
did that rule out the solution being a later life mortgage then, or not? Or was that part of what needed to happen?
Their circumstances that it has to be a lifetime mortgage.
It has to anyway.
They don't have an income, certainly won't when she leaves.
Yeah, of course.
So they won't have income or pension to support it. So that particular, to get a bit specific, that particular outcome is actually just a backup plan at the moment because I've recommended they sell the house. And I'm hoping that they've got an open house at the weekend. So I'm hoping someone's going to come and offer, and then we're going to move them to a house that's more suitable and a much cheaper lifetime mortgage because it's not max borrowing. But because their current lender's been so aggressive, it's like, well, if it doesn't sell this weekend, we can remortgage it to a lender with no early repayment charge, keep the wolf from the door, And then,
and they could still move potentially.
You can still
anyway.
sell then when you want, but without that constant like waking up in the middle of the night worrying, or what is currently happening, which is the mum doing overtime at Sainsbury's in her 70s when she just doesn't want to.
It's nice to have that backup plan for them, though, isn't it? Yeah. Okay, so we can try and do this. If that doesn't work in terms of the open house, we've got this anyway. Yeah, that's true advice, isn't it?
So it ticks the boxes from the regulatory standpoint, but just for my own sake, it's like,
that's what I mean.
Would I like to have a mortgage? Would I like to sell them, if you like? Is that still a bad word? Provide them, sell them a mortgage worth more money to me? Yeah, of course I would. But actually, I'd rather them have a lifetime mortgage that grows slower, because they're not going to pay it, or if they do, they're only going to pay bits of it. I've suggested to the kids they have a crack at paying it as well, because you can. But yeah, I'd rather them be settled. And again, what about 80-year-old them? If they go for an 8.5% mortgage now, what happens later?
Absolutely. It's almost like what I'm hearing here is have a conversation that your future self and future client will thank you for, isn't it? Because you can't predict what's going to happen.
But you get that. That's the kind of level of you have to go quite deep into it, and there's not a lot that you see. The foreseeable harm comments from the FCA, they've got their own reasons for that, but it does make you stop and think. Actually, most clients can cause harm to themselves quite easily with just a moment of, you've only got to have a drawdown lifetime mortgage and go a little bit crazy for a week or two and book yourself 3-4 holidays, and then you're in quite a lot of trouble. And that's actually one of the things I was telling Chris downstairs, was where you guys are quite strong is that we get an email from you to say, this client's accessed their drawdown, they've requested £4,000 or £5,000. Would you like to make contact with them? And that's a nice thing. I think that's quite unique to you guys as well.
Yeah, it gives you a really good chance to go back and revisit that advice, isn't it?
Yeah, especially if it's recent.
Yeah, and I guess what what I'm hearing with that story you mentioned with your clients, unfortunately still working at Sainsbury's and going through that, is actually they'll probably be vulnerable. Clients can become vulnerable very quickly as well. Yeah. We all know that the minute there's vulnerability involved, that's where those snap decisions can be made, can't it? Without actually even if they do try and think holistically, it's hard to have the headspace to and remove the emotion from it without that advisor intervention, isn't it?
Yeah, you've got to have that step away, I think. And someone just looking at it from above a little bit more and saying, is this 100% right for you? What they want isn't necessarily what they need. And it does take some courage to be able to do that, especially when you know that sometimes you could have a case where you give them what you feel is the best advice, and that best advice might not be what they want. But then they could easily go off and find another advisor who doesn't ask those extra questions, who ends up getting the max borrowing because that's what they wanted. And then you went. So it's a real fine line. You can't necessarily be too bullshit about it.
Yeah. Have you had scenarios where it's been the other way then? Obviously, you gave that example earlier when it was early in your career, done max borrowing, they've come back, obviously husband had died. Have you seen it where you haven't done that before? Situation has changed. You think, that was obviously really good that I didn't do the max borrowing.
So there's lots of circumstances where, and this is quite sad as well. There's a lot of this is quite sad. I'm sure that's why I have weight issues, because you have to you Haribo your way through an afternoon occasionally. But not that I'm an advocate of anything like that. There's a huge, I've done cases before where they wanted to go cruising a lot, and then one of them dies. And they don't want to go again. So there's times where people are like, I've had one recently where they wanted again max borrowing, and I'm like, no, you don't need all that. It's just take it as you go. But yeah, you see it all the time. You often get people who are the other way around as well. Where you've suggested they take a lot more because they haven't quite worked it. I've seen it. I hate to say it, right? I'm going to say this, but you can cut it if you need to. But I've been the second advisor to someone's house regularly from other firms who have been more about cross-sale and upsale. And then I've gone in and be like, hang about, have they even taken documents yet? And they go, no. And I've found things like there's a second charge that they didn't even realise. So the 40 grand for their repayment of their mortgage, and then the 5 grand for the LPA funeral plan, all the other bits that the other advisors advised, has been totally inappropriate, because there's another 20 grand needed anyway just to settle the other part of the mortgage.
And then the solicitor fees to remove that on top.
It's absolutely crazy. And you go like, wow. So then, I whinge at HR. We've been with them a long time, and it's very happy there. And it's just, we do whinge whenever there's a change in process. They're like, you need more documents. You need to prove their mortgage. You need, you think, why do I need to prove income if it's a lifetime mortgage they're not going to look to pay? Why do I have to have a credit file because they're not being credit scored? And they come back and they go, yep, we just want you to have it. It shows you know your customer. And that was the day that rule came out, was the day I went to that client's house and I asked for those documents. I'm like, yeah, Kay was right. Yeah.
So is that what I'm hearing here then for both yourself as the advisor and then to your clients, about contextualising it, isn't it? And,
I think so.
And actually explaining the why to try and prevent them going down these self-help avenues or going with somebody else that might cut corners, isn't it?
I think it's huge. It's to just go, I want equity release and I want this much money, and then just have that algorithm spit out. I think that would be there'd be a great computer system, wouldn't it, that would do that. So touch wood, it will give me the next 25 years that I need, and you know what I mean. So I think
a decision like that. There's so many nuances, isn't there? And it's how would you bring the family's opinion? Because going back to that piece, that's a huge part of equity release, isn't it? Or later life lending is the family being on board. And I'm interested in going back to where you mentioned, like, sometimes you'll speak to the kids and actually, can they chip away at any of this mortgage? How often do you have that conversation?
So first thing, it's always the client in control. So if the client really doesn't want their children involved as much as we really want them to be, ultimately they're in charge. And some of these people, they've got so far through their life without people telling them what to do, and you just have to respect their decision, even if you don't necessarily agree with it, right? But so I do labour the point of the impact on the kids and themselves. So future you and your children will be impacted by this. Then they kind of go in from that route. More often than not, people are very happy to have their children involved, even if it's just helping send documents across. And that's where the WhatsApp way of getting documents, because it's encrypted, it's all fairly good to use. It's a great way of talking to clients, because suddenly the barrier between their children and you is far less scary. So occasionally you get the odd message back saying, oh, how does this bit work? I've been looking at that. So even if they didn't want to be fully involved, they just do start to ask questions, and of course you get that in there. But I suppose for me, you do have those conversations with everybody where I just say to people, I really want to speak to your kids about this. And the joy of digital suitability letters, even for older borrowers, is great, because you can easily email them around to everybody. It's not like you've got to do more posts and another trip to the post office, stuff like that. So.
It's great using technology to do that, because the fact that they're already involved by default by parents agreeing for them to be in that WhatsApp group, or you to be in it. So therefore they're going to have the odd innocent question, aren't they, of probing things. Have you had scenarios where they may have not wanted the kids involved, but because of that involvement for just that element, they've got more involved, if you know what I mean?
So, I mean, there's times when that's happened, and there's moments where you just have to kind of draw the line and say, well, actually, do you know what, when I spoke to your parents originally, they suggested that they would rather deal with this on their own and just have you help with the documents. So, unless you come back with authority from them or they speak to me about it first, I'm not going to tell you. So there's an element of you have to be brave for the client as well in that case, because you never know whether it's coercement or whether it's something darker along the way.
You don't want to break their trust either.
No, exactly. And there's a huge amount of data issues with this, with stuff like that. If it's not, under LPA or anything like that, you've got to really be careful and walk that line. But I think the thing that I think the whole kind of industry needs to recognise is how they call them older borrowers, right? But they're so clever. They're like they know how Facebook works. They know how WhatsApp. Most of them are like my mum's. She'll hate me for saying this. She's younger than 60, shall we say? But she's on Facebook, WhatsApp, better than anybody. But to have this stance of I have to see you face to face, have to send paper documents, that sort of stuff. Which I know some places have. I don't think it's not always necessary.
My granddad was 95 last month, and up until a couple of years ago before his stroke, he had Snapchat and Instagram. So it's definitely, he's very tech savvy, because COVID caused that really in a massive way, but he's always enjoyed technology. So I think as well, it's like, as you said, as people get older, it doesn't mean that they're not interested in these things.
Absolutely. And for all the things that COVID caused and all the upset and heartbreak and everything that it impacted, what it did was upskill grandparents hugely.
Big time for digital, isn't it?
Yeah, absolutely. And I just think we often have situations where people are saying, like we have to do a vulnerability report for anyone over the age of 50 just because they're over 50. But you could just as easily make the argument for a first-time buyer at 25.
Absolutely.
I would challenge everyone around actually the vulnerability form probably wouldn't be a bad thing to bring in for every interaction.
Couldn't agree more.
Because
totally.
you school education on, what's a credit report.
Well, we just had a previous guest in who, Andrew Jenkins, and he was talking about mental health and well-being, etc. And I can't remember the stat he shared, but I think was it something like 60. Don't quote me on this because I'm trying to remember it, but it was about 60% of kids now are actually potentially going to be diagnosed with like a mental health issue. So actually, that would class as vulnerability. We just released a vulnerability checklist in conjunction with the Consumer Duty Alliance. So we worked with the Consumer Duty Alliance and created for advisors, intermediaries, business owners to use a kind of how to identify vulnerability and how to deal with it and how to make sure that within your firm or your business that you're doing it correctly. And you're right, vulnerability doesn't just impact
100%.
Just because you're older doesn't mean you're vulnerable, but likewise it doesn't only impact you in that age range.
You can't use it. It's not a binary measure, is it? There's so many things that impact on it.
I just think it's really important that everyone keeps that. It's almost like, when you're at a sports club and it's like there's normally like one safeguarding officer and everyone goes, oh, well, that's their job. But actually the best way to do it is that everyone's a safeguarding officer and then only one person's reporting stuff, right? Everyone should have that same responsibility to make sure that vulnerable people are being looked after and being, adapted to whatever needs they've got.
And how do you bring that? I'm quite curious because some of the feedback we tend to get from intermediaries, what we hear from people is that's not always an easy conversation to have. It can sometimes a client won't want to recognise that they're vulnerable or hear they're vulnerable. So with that checklist that you use, how do you introduce that? Or does the client know you're looking at that? How does that work?
So we position everything at the start of a meeting with, their best interests of what we're here to get to. And, some of that is going to be asking them questions they don't necessarily want to have asked, but we're going to ask them anyway because we want the outcome to be the best for them and only them. And not for the kids, and not for us, and not for anyone else. So they do kind of get to a point where I find they open up quite a lot. And most people that get to me, because we don't advertise, or we're strictly word of mouth, referrals from other people, and help people who've helped already. So most of the people ring me up and they're just like, my friend told me to ring. I'm in trouble. What can you do? So they're already at the point where they're ready to cry on you on the phone and very quickly able to open up. When it comes to vulnerability stuff, I think it's how you position it. If you said to somebody, I'm going to do a vulnerability checklist now, sorry, you appear to be vulnerable. No one's going to agree with you. There was, I've been through it, but I think I'm doing all right. You're not in it for telling someone, to categorize someone, but just through conversation, if you find out they've been recently bereaved, and I've got one client at the moment who still uses the email that her and her husband shared. Instantly, I'm like, oh, so where's he then? And then she was like, oh, yeah, he passed away. So straight away, it's like it puts you as an advisor into this world where you know that person's going to need looking after more. And how are you going to do that without necessarily making them feel like they're vulnerable? Yeah.
Yeah.
But still wrapping your arm around them a little bit and saying, do you know what, we're going to make sure that you've got that WhatsApp group going. We're going to make sure you've got the, the right to talk to me pretty much on the back of a text message. I've taken one case where I'm actually liaising with the estate agent and the solicitor and every party involved just to make sure it happens in a timely manner so she doesn't have to worry so much.
But the minute people open, what I personally found, you might be the same, and Wayne, I'm sure you've in your experience as well, that the minute someone opens up to you about their finances, which in the UK especially we seem to be extremely private about that's the thing, you don't open up about. It is almost like the minute they feel comfortable to open up to you about that, it opens the floodgates to the rest of their life. And the amount of stories that you do end up hearing about, and you almost feel like a bit of an agony aunt sometimes. And you're right, it's that treading that line, isn't it?
It's definitely an agony aunt type role. You have honestly, Christmas is like, but all of them say to me, you don't have to send me a card back, enjoy your kids while they're young. That's part of one of the things I wanted to kind of get off while I was here, is that the importance of having, I think why a lot of people talk to me quite freely is because I take advice off of them as well. So things like do the school run, make sure you're home for the kids' holidays, enjoy Christmas, take the time off work, those things that they can give you back. It's not quite the same as when it's a regular mortgage.
It's a two-way street, isn't
I
it?
get
You're benefiting
advice
from their experience, their life experience.
Yeah,
It's enhancing your life, isn't it?
And it's really nice. And they hold you to account as well. I've got
Wow.
one lady who rings me every year, and she's like, "What? You know, they say customer contact,
Yeah.
right?" And they were expecting me to do that outward call. She rings me. "Oh, Stu, just seeing how you are. How's them kids doing? Are they all right? Yeah. Have you looked after them? You brought to school? Is there any problems?" And I'm like, you sit there and you're like, in your head, you're like, I've got lots of work to do. But how can you say, sorry, I'm busy? Because it's like to go out of her way just to check on my family.
Yeah.
That's crazy, isn't it?
I actually saw an interest, I think it was actually on social media, but it really brought that home of that shared advice piece and why it's so important. And I think the analogy on this, it was like an analogy to make you think, but it was about a neighbour who was like a single parent, always struggled money wise, etc., and always asked the other neighbour for something.
Yeah.
So time and time again, this neighbour would occasionally then ask back, like, "Oh, I've run out of sugar, or I've run out of salt." They hadn't,
Yeah.
but it was just so that two-way street stayed open and that trust was there, that it wasn't all take. It was actually, we can give a bit back as well, and it enhanced the relationship, and it taught, that was the whole point in that analogy and that I saw online. It was all about actually let them give you a little bit back and you'll get so much more in return.
Yeah. I agree with that. There's a lot to be said for giving some of your own history away as well. So if you looked at it from a consultative selling perspective, which is the official terminology, and so if you looked at it from, if I want someone to really open up to me, I have to open up to them. And I've just got so used to just telling, I've told you guys when I got here, I've got 11-year-old twins. My wife's a great mortgage advisor. There's already bits about me. We've walked across London, so I like a hike. So there's already information coming to you guys, and that helps with a conversation. It's no different with a client. If they're, to get to that point of I owe 150 grand on a 300 grand house, I'm really in trouble, help. It's not always the first thing they say. They might. There's really sad ones where it's like, my daughter's in trouble, and it's straight away, it's like, I need 20 grand, don't care how I get it. Yeah. And how vulnerable is that? Because that could be anything. Can it, that solution, they just agree to it. So you've got to be really right on what you do. And so
what would you say is the main reason for lending then? Would you say it does tend to be that kind of, and I guess it'll depend on your brand and what you're known for as well in your area, but do you tend to find it is the people that are in that kind of, I'm really struggling, I'm in dire straits, or do you get quite a mix of reasons? So
we get cases from a lot of introducers. So over the 10 years, I like a chat, hence why we're here. So it depends on the company that's introducing it. Often, sometimes they're the more high net worth type people, and they're going down that route. But almost always, I seem to be the guy people go to because they want someone looked after. Not necessarily they want just equity release or they want just a Rio or whatever. It's because they need that kind of that arm round and more of a handhold, if you like. So we kind of been pushing. It's more of a tailored service. It's only me. So, my wife does her own stuff. One of my clients called her my secretary the other day. Like, oh,
and
you
she'd
poor
started
man.
the business.
Yeah, I'm like, you're not going to talk to her now for a little while. But yeah, so it's definitely her business. So she's not my secretary, but there's this. You just with us, we get the clients come to us and we do our very best for them. I think when you look at how much and what are they borrowing for, a lot of it's home improvements, staying at home. Not everyone's looking to move anymore. I think a lot of people are just kind of drawing in a little bit, mainly because of the global stuff going on. I think people aren't really trying to move up, move on. We're still seeing gifts for kids. A lot of it's emergency funding, worried about what they're going to do in the future, what happens. Someone called it savings paralysis. I don't know if that's an official thing, but it sounds good. So if you've got an income and then you've got 10 grand left in savings, but you don't spend the 10 grand because you don't know when it's going to come back or how it's going to come back. Yeah. So that's what we're calling it.
A safety net type thing, a comfort blanket.
Yeah. So
people want to have that something there, not tied up in bricks and mortar.
Yeah. So it's that savings paralysis where if they just had a lifetime mortgage for a 10 grand initial borrowing and a drawdown, then they're only getting charged for that 10 grand initial borrowing. It tops up what they've got already, and then they can easily access more money, they hope, subject to terms and criteria in the future. But it just frees them up to stop worrying a little bit. One of the things that I think is relevant as well is making sure that brokers who don't specialise in 50 plus mortgages, so if they don't do lifetime mortgages but do retirement interest only mortgages, or don't do retirement interest only mortgages and only do interest only, like with regular lenders, need to think. I would challenge them all to think long and hard about whether a lifetime mortgage is better for someone sooner.
Yeah, I was just going to ask you that. What would you say are the things to look out for? So if anyone listening, whether they're because I guess we'll have financial advisors, paraplanners, people from all walks of the intermediary space listening to this.
Yeah.
What would you say they should start to look out for that would maybe make them think, oh, I should get a specialist like yourself? And
someone you can. I've got a group of us that we meet at we mostly meet at Wetherspoons for coffee, but occasionally we're known to attend the German Doner kebab house in Plymouth, where we just have 3 specialists in our area and we just chat about different cases and stuff. And it's like quite casual, and it's obviously very healthy. But I would encourage anyone to buddy up with someone who knows what they're doing and just run it. Just say, if you want to show a holistically sourced file, if you want to show that the outcome that you've got is the best outcome for your client, then you should have research on there showing that you've looked at a RIO, you've looked at an interest only, they call them a TO, aren't they, term interest only, and you've looked at a lifetime mortgage. Does a hybrid fit? Has anyone bothered to look? How can you prove you've done the right thing if you haven't got that evidence on your file? And I think the days of hiding behind a disclosure document are pretty over. So if you say, well, I told them at the beginning I'm only an equity release advisor and I don't look at anything else, I'm not sure if that would land going forwards. I think we need to be, here's my research that clearly shows that this RIO is the right outcome for you, or this lifetime mortgage fits you best. I think if they're looking at any broker, certainly, so maybe not wealth planners as such, but anyone who's doing a mortgage for someone with a term, especially if that client is saying outwardly, I don't want to leave, I'm not interested in, if they want long-term security, why would you do a 5-year fix or a 2-year fix for someone like that when, if their income is limited, what happens when that rate ends? It could have gone down, but it might not. If that lifetime mortgage rate, I've done a quote for someone this morning, 5.98% on a non-income assessed lifetime mortgage that's going to be fixed that same monthly payment for the rest of their life. The freedom and the psychological advantage that's going to have on that client, because they know it's affordable forever, is a much nicer look at retirement than worrying about what happens at the end of my 5-year fix rate.
And even in wealth planning, that can unlock so much extra to play with, can't it?
Absolutely, wealth planning.
Because, even if you are thinking of that kind of wealth and retirement space, people are retiring with less and less funds now. And don't get me wrong, you still get your high net worth clients, but even then we're looking at IHT scenarios, and I know that equities can't be used for that specifically, but when you're looking at how do you get the family involved, if they want to gift, is it better maybe to gift them the home than your pension? You don't know, do you, until you've had someone like yourself look into
that's 100%. That's 100%. But there's also, like, we within HLP, we're not tax advisors.
The show me test almost, isn't it? You can evidence that.
Yeah, show me. Is there scarier 2 words for a broker that doesn't know what they're doing? Show me. Okay. How do you do that? It is exactly that. I think there's rules and procedures that are written, and I still think they're written from a compliance perspective rather than a sales. And I mean positive sales perspective is, don't get sued because this document's done. Well, that's fine, but actually what we want is the best outcome for the client. And we do that by evidence in why we've looked. It's things like, I did one the other day. I know in my head straight away that this person was a 50 plus. They only need a mortgage for about 5 years. Then they've got loads of money maturing. They're going to pay it off. Right. So in my head straight away, I'm thinking, that's all right. That's possible. But just in case, I thought, well, what if they've got more money that might mature quicker? So we thought, well, we better get a bridging quote just in case. I know the client's not going to like that. They don't like that. They've emailed me today. But at least we've got it on file to say we have looked at these other options.
Because you could, 10 clients might say they don't like it, but one might turn around and say, I really like that idea, actually.
They might prefer it. You're right, I've got something coming out in a year as well. That can work. Who knows? But it's not our job to know, is it? It's to find out. And I think that's probably circles back to my dad as a police officer, is that actually I'm still investigating quite a lot of stuff. But I'm not necessarily having to go through the rigmarole that he went through in his working career. So.
I guess some people might be listening to this, and again, it's about a trust element. Thinking about building that professional connections, building that network that you have. Some people might be sitting here thinking, right, I know I want to do that now, but how do I pick the right people? How do I find them? How do I go about it? And how do I learn to let go? it's hard to let go sometimes of your client, isn't it? And, or work with someone else. How have you got over that challenge or any barrier?
So I used to, when I first started, I have a test that I put on people.
Okay.
And I used to pick the dirtiest, divest pub to meet people with.
Yeah.
And if they said, no, I'm not going to meet you there, let's go to somewhere, they'd always offer a solution. And I'd almost instantly know by what option they gave as to whether I'd work with them well or not. Because I'm like, no, I like that one because it's never ending Lavazza and it's like, it works. I'm not mentioning the brand, but it just, that was a great starting point for me, because I'm not a suit wearer. I'm not going to go to people. So, I work around primarily home visits around Devon and Dartmoor, and they've always got dogs. There's probably a farm track. There's something that's going to cover me in some sort of round. Let's not go into that. But I'm not that guy. So if you wanted a 9 to 5 appointment in a suit, fine. I've got great people I know from the industry that can do that for people. If you want to walk on the moors, game of tennis, bike ride with a client, I've done all those things and it's been great. So I think when you look to forge relationships, I think it's important to like the person first, and then you can do all your weaseling behind the scenes. Like you can look at their Google reviews and you can see their comments on LinkedIn. And one thing I like to do is look at people's comments on LinkedIn on other people's posts, because I think that's always quite interesting. So you're not just seeing their advertising, you're seeing who they are as a person as well. Are they supportive? Are they looking after that?
I do the exact same when I'm recruiting people into our team. That's the first what I'll look at, is their activity. I'm giving them a game away here, but it's the activity. But that is their true self then, isn't it? It's really the kind of unfiltered part. I guess still filtered to an extent, still on a...
But it still gives you a better glimpse.
But it gives you, an idea of, are they congratulating people? Are they happy for people? Is it positivity they're spreading or not? And it's that, isn't it?
There's also, there's other things you can get into, like from the like, do they charge similar fees to you? Is it a percentage-based fee? Does that sit with my own ethos? I'm more of a fixed rate fee because I always think it's a similar amount of work, irrespective of how much commission it might be or how big the loan amount is. So I would, I try and keep to that. Not everyone does, and then I think, well, that's going to be difficult for the client to comprehend. And where do you go? So ultimately, it just comes down to finding those people that you do work well with.
You're assessing that compatibility, aren't you, in terms of that? And from experience, the ones that will work well with. So
so if you think about it, like go back to your school days, there's certain mates that you would take to war with you, right? And it feels like that sometimes, and it's the same with work. There's certain. I know that a lot of my introducers will send me a case because that client needs looking after, and they know I will. It doesn't have to be, I'll pass you this, but only if you promise to behave and look after them. Do you know what I mean? I know I will, so that's why they could probably send that case to me. I mean, it probably has a downside in that I don't get maybe the easier ones, but I'd rather do it this way, because it's always like, if you don't look after the client, who does?
Yeah, exactly that.
Where do they go? And there's no control.
A huge amount here on client care, doing the right thing, that integrity. But I guess from what I'm seeing, it's coming from a genuine place of enjoyment.
100%. Yeah. No, I can't imagine anyone doing this job because they don't like it. I've never liked bullies. I've never liked the idea of looking after people when they have no idea is really valuable to me. I'm also from a place where I know that I'm a bit of an idiot in so many other ways. Like, I don't know how to fix my car. There is so many things, like my poor wife's been waiting so long for the house to be decorated that she's doing it now. There's a number of issues that I've got with myself that I can't do, and I know I'm rubbish at stuff. So it's instantly, it's like that rapport builder. It's like, look, do you know what? Like, there's a good example of there was a bricklayer that I helped, and I say bricklayer's a bit offensive actually. He built his whole house. Okay. Right. So
impressive, yeah.
Yeah. So I'm instantly like, wow, you're amazing. Can you talk to me more about your house, please? And it's like, why do you want to know all about this? I'm like, well, because I'm going to blow you away in a minute with what I know. And I'd really like you to show me what you know so that you don't feel like such an idiot at the end, because I know you will. And it was like, oh, that's really fair. Because people do. They think, oh, I don't know any of this. It's not my forte. But if you're a client who's reading up on equity release, even though you don't need it, just because you find it interesting, hats off to you. Because I wouldn't. Yeah. Would you? I don't.
So in terms of the kind of bit of advice then you'd give others, obviously we talked about professional connection, we've talked about a huge amount, and today it's been so good. You've been a fantastic guest here. What would be your kind of one bit of advice or one tip that you would give anybody listening to this that you'd want to share?
So anybody at all about later life lending?
Intermediaries especially.
So I have a little, never underestimate an older person. is huge. Because they've always got a story. There's always something going on. You've got to remember that they've got so much more life experience than you almost all the time, unless you're a 75-year-old advisor who's been there, seen there, done it. That's fine. But for me, never underestimate an older borrower at all. They're amazing, and also sometimes particularly tricky. Some of them have got the most wicked sense of humours. Others have not, and they're very much, we want a suit and tie and we want you there. I used to ask, and I still do sometimes, say, which version of me would you like? Do you want me in a suit, tie? And, that's, I can do that. I haven't done that, but since COVID, no one really cares. But, that would be it for me. Just never underestimate an older borrower and just work with them, because they're amazing at the end of the day.
I love that. Thank you so much. And what a credit to the industry you are with that care, time and attention that you're giving your clients.
It's great.
It comes from such a lovely place. Great advert for the industry.
Just put good in, get good out, and you never have to worry about not sleeping right.
Thank you.
Thanks so much, Stuart.
Okay.